It has been quite a week, as I said at the start of the show today. There's an awful lot happened. In fact, it's almost difficult to remember what happened on Monday. The world has started to become an interesting place internationally, nationally, which is, I guess, better than boredom. But the Chinese have a curse, which I think you must all know about. May you live in interesting times. And we are living in interesting times. But let's hope it all calms down in the near future as we head towards Christmas. But I think we'll look back on this year and go, whoof. And one of those people who will be looking back this Christmas and going, woof, because a lot has changed, not necessarily in his life, but in terms of the areas that he is responsible for, is our next guest, Craig Stobo. And Craig joins us now. Craig, welcome to the show, mate. Lovely to have you on.
Good afternoon, Michael. How are you?
Good, mate. Listen, we usually talk about economic and financial matters because that is your particular expertise. But there, and I haven't warned you about this, so this is left field stuff. You're
Yeah,
taumata of the Otago Business School, yeah?
yeah, advisor. That's right.
Yeah. But I saw there was a article, and I'm not giving a go, so just so you know, at Otago University. But but there's an article in the Otago Daily Times this week suggesting that the marketing department of Otago University, I think it is, has had allegations of bullying and, staff disruptions and upset and stuff like that. And it's found its way onto the front page of the ODT. Now, I suspect one of the reasons it's found its way onto the front page of the ODT is because A, the ODT is a local newspaper in the proper sense of the word. It's probably the only one left in the major metropolitan centres. But the second is that when anybody gets upset these days, they tend to run off to the media, don't they? Is it a phenomenon that you've observed in the commercial world as well?
Yeah, normally there's a whistleblower mechanism where employees can go one above the person they're reporting to have a discussion around those sorts of issues.
Yeah.
So I would expect the university would be no different. So you then say, was there a process in place for that, or did that process break down? And people are left with little choice. How do they fix or solve what might be a grievance? But in my experience, that pathway never works out favourably for any party.
Mm.
So you're best to figure out a way through yourselves, negotiate an outcome that satisfies everyone, or if it needs be that the pathway is not clear, agree to disagree, and in some cases there's a change in staff. So always best to talk rather than go outside the organisation because it diminishes everybody.
Yeah, I guess it does too, doesn't it? Because the reputation of, in this particular case, the marketing department of
Of
Otago
both people.
University. Yeah,
Yeah,
yeah, that's right. Mm.
yeah,
No, all right. No, 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 that's fine. Listen, I wanted to talk this week. Well, first of all, can I just talk interest rates with you because this is something that you
yep,
know an awful lot about. There is a suggestion still. I mean, the one of the stories of this year, and you said it all last year, Craig, and you've been proven right. You said last year, if you adopt this mantra of survive until 25, then you're stupid, basically. And you said that all through last year, and boy, have you been proven right. So this year's been very spotty in terms of economic activity. There've been a lot of redundancies, a lot of bankruptcies, a lot of liquidations, and it's tough. We know that. Um, so the OCR has been cut to try and stimulate the economy. The suggestion is that inflation's under control. Is it your view that there'll be a further cut later on this year or early next?
yeah. So just a bit more context with that question. So the reports came out this week around liquidations and retail.
Craig's just left us. He's left the room. Okay, so you'll go and get him back. Okay, that's fine. It's just that there is a suggestion that the OCR will be cut to 2.225%, which seems extraordinarily low, doesn't it? 2.25%. and as a consequence of that, there'll be further stimulus to the economy. God, we'll be hoping so at the moment. I can give you, just for getting Craig back online, a good piece of jobs data from yesterday, that there's been a 6% rise in welfare recipients finding work. So last June quarter, 21,000 people found a job. They moved from the welfare benefit or from a job seeker benefit into work, which actually would suggest that's a pretty good result, that 21,000 people have in actual fact had that outcome. All right, we're going to take a quick break and try and get Craig back for you. All right, we have Craig back somewhere. Do we have you back, Craig?
Yep. Hello, how are you? Yeah.
What happened there? Did it go flat, did it?
I switched to a Wi-Fi platform that given me some more access rather than relying on my cell phone, so my apologies. So I'll just try and finish the answer to your question.
Yeah, sure, go for your life. Yep.
So green shoots, as I mentioned, retail and construction company liquidations has been featured the last few days. The way I'm picturing this going forward is that the consumption part of the economy is really weak. Government's not adding as much as they used to. So the real part of the economy that's really going to make a difference is the investment side of the economy. So we've talked about the terms of trade being really good for agriculture and pastoral products. We've talked about the pickup in tourism. Even international student arrivals have improved. The changes to the earthquake strengthening conditions is really important for Auckland. So projects that were not feasible before will become much more feasible because the earthquake requirements are diminished. You've got those investment tax breaks that were announced by the government earlier in the year. And if you look at the kind of flag for the future, you can turn your mind to the share market, and the New Zealand share market's up roughly 10% since April. So earnings are looking okay, supported by obviously the tailwind from interest rates for some parts of the share market, like property. And so the OCR's come down and will continue to be a supportive tailwind. And the Reserve Bank has said that there are conditions under which they will cut again before Christmas. The food price index came out last week or so, and it was negative in the month of September, but on an annual basis, still quite high, 4%, 4.1%, but on an annual basis coming down. So, that green shoot stuff, sometimes you don't quite see it till you look behind you and realise that, the grass has been growing, but it won't be in retail necessarily, and it won't be supported by, for example, quite an not austere, but a government that is trying to restrain its expenditure. So to answer your question, it's still a possibility that the RBNZ will cut rates as inflation comes down. We've got a CPI number coming out shortly for the September quarter, and market expectations are for it to rise to approximately 3%. So that will be a reason why the Reserve Bank won't be off to the races on cutting rates. They'll be thinking about the composition of that and the conditions under which the economy is growing. But as you said at the very beginning, it's been a very, very bumpy GDP economic growth ride this year, and it will continue to be so for a while. But the sectors that will be doing well will be in the investment-led parts of our economy.
But if it does go, I mean, what's the target rate, between 1% and 3%, is that right?
That's right.
Yeah, so if it does go to 3%, Craig, and let's be honest with you, economic commentators predicting GDP and inflation rise have been a bit spotty this year. That would be putting it nicely. But if it goes above 3%, what does the RB do? Does it increase interest rates?
Well, I think they'll be looking at the components of that and the pressures that's caused that. What I would suggest will be a temporary annual rise, which is why they'll be cautious about the next stage in considering reduction in rates. But while the economy is quite weak, they've got some grounds to suggest that inflation will come down. Unemployment, for example, is still sitting above 5%. There's still spare capacity in the economy. unemployment in Auckland, I think, is over 6%, and youth unemployment's quite high. So they will be supportive, but they need to know that that 3% number or thereabouts will be coming down in the future. So their forecast, their CPI forecast, will be pretty important. But they knew about this at the last time they made the rate changes, so I don't think this will be new information. It'll be a question of whether it's 2.9 or 3, but they do have a forward-looking track for inflation that is dropping.
It's interesting, isn't it? Because the death of Jim Bolger in the last, 48 hours and all the lies that have been told consequent. But one of the things that's come out is actually that whole inflation thing was put in place, I think, in the early parts of his time of 0 to 2%. Just remind me again, why did we move to 1 to 3? Was 0 to 2 too prescriptive?